What's going on? This is Travis from Expert Advisor Reviews, and in this video I'm going to end up showing you this one easy strategy that could have ended up bringing you in over 1,000 pips over the course of the last year, being able to trade the Euro United States dollar, and it's given a new opportunity right now. This is the new series of what we're going to end up talking about, being able to talk about easy strategies that you can be able to learn and be able to implement yourself manually so you can be able to create some extra cash flow for yourself. So let's not waste any time. Let's go ahead and get right into this video. As we end up going through, I am on Smart Trader. If you've ever been on smarttrader.com, I end up using this one website for one very specific reason. I'm going to end up going through that in a second. But as we end up looking at this chart, we can see since May of 2022, this market has been able to be on a uptrend. It started to consolidate a little bit, and we're actually in the middle of consolidation right now. But over the point of being able to take a look at this market has went from the fractal low all the way up to the fractal high, up almost 1,700 points. Now, I end up talking about how you could be able to make over 1,000 points based off of this one simple strategy, and it's called the precision entry point strategy. If you're not familiar with Fibonacci's or being able to take a look at counter trend line breaks or anything else like that, this would be a great time for you to be able to take a look at this video, get a pencil and paper, and be able to kind of go through some of the stuff that I'm getting ready to go through. I'm going to be very brief when I end up taking a look at this. The first thing that you have to be able to know is what is the actual trend. Now, we always start off on a daily time frame or even a weekly time frame to be able to understand what's going on with the overall direction from a long-term perspective and a direction from a current perspective. But as we end up taking a look at this, we can see that the trend is going up. So the one thing that I love being able to use Smart Trader for is something called a smart fib. Now, what the smart fib does is that it allows you to be able to go all the way down to the fractal low. And if you're not familiar with a fractal low, that means that it is the lowest candlestick where you end up having two candlesticks to the left and two candlesticks to the right that are actually above it when it comes down to price. So this is the lowest price. All you have to do is just move your mouse down to this bottom area, left click, and then after that, you end up getting the fibs that have been completed when it comes down to the ABCDs and the current fib that's actually actively happening. As we end up taking a look at this, you can see this in green and in yellow. Now, when I end up going through the strategy is really not based off of the daily, but as we end up taking a look at this, we end up going to the weekly to be able to see what direction is. So if we take a look at what's happening on the weekly, we can see that the market is in an uptrend. We can look at the daily and see that the daily is clearly somewhat sideways, but it has been in a previous uptrend. So we can consider that the market is going to end up going up at least for a certain amount of time. And if the market stays within trend, then you can be able to have that. So once you end up understanding that, typically what I would love to be able to do is just go into the 2 hours. So I'm going to erase these fibs right here, and I'm going to end up going to the 2 hour time frame. I'm going to go back to that same fractal low, and what you end up noticing is that there will be more fibs when it comes down to the position. Now, remember, the larger the time frame, the more important the information, but the shorter the time frame, the more opportunities that can be presented to you within that overall trend if you end up getting the correct trend. So I end up clicking on this, and as you end up taking a look at it, this is how the strategy ends up working. The first thing that you want to be able to do is that you want to be able to locate the overall fractal low to the fractal high. This system will already end up setting that up for you. Then from there, you need to map out your ABCDs. Now, if you're not familiar with an ABCD, essentially what it is that you end up going to the fractal low or the lowest price when it goes from there to the fractal high, which in this case is two candlesticks to the left and two candlesticks to the right that are actually below the highest candle. Then from there, you end up using the Fibonacci tool to be able to understand where the market is going. Now, if you're not familiar with the Fibonacci's, what ends up happening is this. There's a certain amount of percentage of numbers that basically end up letting you know where the market is going to end up going. But I want you to remember this very simply. If the market ends up retracing to a red area, then it will extend to a red area. If the market ends up retracing to a blue area, then it will extend to a blue area. If the market ends up extending to a green area, retracing to a green area, then it will extend to a green area. As we end up taking a look at this, the fractal low or the C, when it came down to this movement, end up retracing to the red area, or in this case, the 5-0 retracement. And from there, the extension that is expected would end up being 1.0584. And if you end up looking at it, the market end up going to 1.0599 before it end up making a new fractal. Now, that is pretty much the setup of where we should expect that the market is going to end up going. Let's talk about how you end up trading this. So we end up having a fractal low. we end up using a stochastic or anything else like that to be able to know that we end up having the market be in low volatility and being in a oversold market at this particular point. So that means that we're actively looking for buys. Then from there, once you end up getting your overall retracement, you would like to be able to use a line tool or anything else like that to be able to figure out what is going to end up being the next counter trend line break that has to happen. So as we end up taking a look at this and we end up seeing this market actually move, essentially what I'm looking for is being able to see that this market ends up making a smooth U-turn. Once you end up having this smooth U-turn and break this counter trend line break and actually end up closing above it, then you want to be able to enter. So let's say we end up entering off of this red candlestick right here. I take profit at this point. We end up being the D extension or a little bit before, which is 1.05. Let's say 1.0580. Let's say we end up getting out at 1.05 or 1.0583. Let's say we end up getting out at 1.0580. And our stop loss will end up being below the fractal low or the overall A position. As long as you end up placing your stop loss below the A, then the market should end up eventually moving your way, which means that you can be in this trade with confidence and be able to know that this market is going to end up going to the position where you're going to end up doing, as long as you end up placing your stop loss below that black line or below the A. So let's go through this a few times and just go through this strategy, and we'll just keep on talking about it. I do not have the stochastic on the screen, but if you end up using a stochastic RSI, or if you end up using just a RSI in general, then you can be able to find potential low areas that are oversold. So first trade, market ended up going from here, market retraced, gave us a counter trend line break to be able to go into, end up profiting off of this move. We can keep on doing the same movement and keep on seeing the same action end up happening over and over and over again. All you have to do is just remember the color scheme. So we go through and we take a look at this again. The market end up making an A right here. You end up having a B or a new price right there. The market end up retracing all the way down at first to the red area or the 618. That made the D extension end up being up here to 1.0673. However, what ended up happening was that the market ended up making a new low all the way down to this green area down here. Once the market ended up making a new low and making a new U-turn right around that green area, then that means that green will go with green. You end up getting out at 1.0620. If you look at it, the market ended up hitting it literally right here at this price, or you can end up saying right here at this price, where the market end up completing that overall move. So we end up going through, take a look at it one more time just to kind of get the strategy to make sure that everybody is good with it. You want to sit up there and you know where the market is going to end up going. You want to end up catching a counter trend line break once the market ends up making that movement. Let's say I end up doing this. Let's make this a little bit larger. The counter trend line break end up happening in two different positions. You end up having this entry, which would end up being a profitable entry. You would have just had to get out a little bit earlier. You end up doing the same thing right here. Here goes your new counter trend line break at the fractal high. We end up taking it to the next fractal high. You end up seeing that U-turn end up happening and clearing. It took a few days, but it ended up hitting profit right there. As we go through and take a look at these next few moves and just go with the ABCDs once again in general again. We have fractal low. Market went to a fractal high, fell all the way down to a green area. Once again, it fell all the way down to the 86 position, or 86% of its overall retracement move. From there, we know that the D extension is going to end up being at 1.0711. Market ended up hitting that position with relative ease. It ended up going back down and doing more of a double bottom, but it still ended up hitting that position. If you're looking at being able to get in as a overall entry, this opportunity or this market ended up giving you two opportunities right here and right here, where the stochastic RSI or the RSI is in the buy zone. You end up having the Fibonacci's fall into a favorable area for you, and you end up knowing exactly where the market is going to end up going, and your stop loss ends up remaining to be below the overall A. If you notice, every time that these markets end up falling, it never fell below that black line or below that A. Now, if the market does happen to move like that, then that just means that the trend is going in the opposite direction. And then after that, you just change up your perspective from being a buyer, in this case, to start looking for seller opportunities. But let's keep on going. We end up having this movement right here. A, B, C went all the way down to the 5-0 position, which means that the D extension will end up being at the 1.618. The market ended up going up here, hitting 3 or 4 times, but once again, you end up having strong movement from this point. So let's just go back and just count how many points you could have made based off of these positions. You have 242 points right there, or 242 pips right there for the profit. You end up having another 200 pips right here for the overall profit. If you got in off of the second trade, you could have made profit off of that. Down here at the bottom in this first initial trade, I believe was 116 pips, or in this case 108 pips. So we're looking at right around 500 pips just based off of those moves, not even counting what ended up happening in here. And then after that, if we go to this last movement that ended up happening before we end up seeing what's happening currently, we can see that the market ended up falling down and making a new ABC. It fell down right here at first, went all the way up to went very close to being able to complete the extension, but fell all the way down to the 618 again. So once again, red goes to red. The market, once it truly made its decision, ended up completing this overall move. And this was a 324 point move to the upside, or pip move to the overall upside, and being able to make profit. Now, as we look at it, we can see that this market is actually making that same type of movement and going through the same type of phase right now. Remember, I ended up saying that this market was somewhat consolidated on the daily, but we can see that this market is truly falling down to where you're finding favorable areas. And to me, a favorable area is anywhere below the 618, 786, and 86 position. To me, that's called the sweet spot. And I'm going to end up creating a dedicated video on sweet spot training and then on zone 3 training as we end up going through this. But this is one of the most ideal areas where you would love to be able to get in. Why? Because if you take a look at it, you could be able to see that you end up having very low risk to very high reward if you end up messing up on this, which means that you can be able to risk a little bit more on a percentage and be a little bit more patient as this market moves. So currently, as we speak, we end up seeing that we end up having a B, which end up going up here, but really the new fractal highs right there. But this considered to be the B. The market has fell down, but it has not created a U-turn. But let's just say if the market ends up falling all the way down to the 786, which will end up being at 107.95, then after that, we can basically end up saying that we're looking at being able to get out at 111.34. Now, our entry strategy will end up being based off of the counter trend line break and it being in a buy zone, meaning that you look at the Stochastic RSI or RSI or MACD or anything else like that. Do you have it in the buy zone where you have potential U-turns? Once this market ends up breaking this counter trend line break to the upside and closes above it, then it's going to give you your next opportunity for us being able to trade. So if you like what I end up doing, please make sure that you end up definitely end up hitting that like button, but also placing in some ideas that you end up liking for its overall strategies and being able to go through those. Would love to be able to get your feedback on this movement. But if you end up adding up all of these movements that end up happening throughout this overall time frame, being able to take a look at the Euro United States dollar alone, there was over 1,000 pips of overall opportunity to be able to be made. If you just did a mini lot, just being able to do that, that's $1,000 in your pocket. Micro or mini lot, obviously $1,000 in your pocket. Standard lot, you're talking about $10,000 in your pocket of overall profit without relative drawdown, as long as you end up staying patient with your overall plan. If you like what I end up doing, once again, please make sure that you end up clicking on the like button and also place in the comments of different strategies that you would like to be able to learn about. And like always, make sure that you end up planning your trade and trading your plan. We'll see you in the next video.